Good afternoon, everyone. Welcome to today's roundtable PPP. Ask the experts what you need to know to get funded. This is the second webinar on the topic that we've had since the stimulus round started just the beginning of the month, I believe. We received a lot of requests from many members and viewers last time for insights on the financial and accounting side. And I hope you have your virtual pencils sharpened because we're going to have a lot of information coming at you today. And our session is organized like last time by the Greater Miami Chamber, the Miami-Dade Beacon Council, Miami-Dade Chamber of Commerce. Shout out to our friend Eric Knowles, who is the president and CEO there and had a conflict and won't be able to be with us today, but we really thank him for his support and leadership. And the coalition of Miami-Dade County Chamber of Commerce's that's chaired by Mark Trowbridge, the CEO of the Coral Gables Chamber of Commerce, and has been leading that organization in this trying time to new heights. And I really welcome all my colleagues who have been extremely cooperative. Thank you all for joining and be a part of this. We are sponsored today by Career Source South Florida and TD Bank. And we'll hear from them in a second. As I said, we put this program together because many of you still have questions. So we asked our friends at BDO, who recently merged with MBAF, to come on today's show and share some of their expertise. Of course, we've also invited back our friends from the SBA who will sort of go over all of the basics again. There's always tweaking going on, so we'd be interested in hearing from them. And TD Bank, one of the largest major banks making loans in the last couple of cycles. So we're excited to have them join us today. Our speakers are going to cover an overview of the PPP program, regulations, the processes, the role of the banks and lending institutions, planning a strategy for maximizing your PPP loan. That's extremely important. Preparing for loan forgiveness. Obviously, no one wants to have a big nut to pay off at the end of a couple of years. So that's extremely important. And you need to have strategies to begin with so that you can maximize that. And of course, taking advantage of some of the other programs, such as the employee retention tax credit there that many organizations are taking advantage of, but few don't know about that. So we want to make sure that you all hear about that and how they can all be used in combination. As always, this is about taking your questions. So you're going to be able to ask all the experts your questions. Last time, I think we had 87 companies that lined up with their questions, and we really ran out of time. So hopefully we'll dedicate as much time as possible to that. Your questions you need to put them in the Q&A box at the bottom there, because that's where we're going to be looking for the questions to the panelists. We're also going to have a series of experts working behind the scenes to answer some of your questions. So keep an eye on your Q&A as well. And of course, watch the chat. The chat is going to be extremely important because as our speakers speak, pardon me, links are going to be dropped in there for you to be able to go and at the ease and convenience, look up the information that's being shared. As I said about the chat, and you all know that all your microphones are muted to make the conversation as efficient as possible, but the chat there is for you to also connect with one another, network a little bit. If you have information you want to share, please feel free to put it in there. Again, if you have the questions to the panelists, we want you to put that in the Q&A. All right. The webinar is being recorded, and you're going to have it available later on in the Chamber's website. I'm sure our partners will also be able to throw it up on their website as well, so look for that later on. Well, of course, none of the work that we do is going to be possible without the help of the many companies who value the work that we do and sponsor it so that we can share it with all of you. Let's hear from some of those sponsors of today's program. First, from TD Bank is Felipe Basulto. He's a longtime chamber leader and immediate past chair of the chamber board. In his spare time, he moonlights as the market president for retail in South Florida for TD Bank. Felipe, welcome.
Alfred, thank you so much. Great to be here. And we are thrilled to be sponsoring such an important webinar. And I'm glad that our participants are joining so that they can be educated and find out more and more information on how to secure these PPP loans or grants. But it's really about the partnership, like you said, Alfred. And that's why for us at TD Bank, America's Most Convenient Bank, we want to make sure we are sponsoring events like this that reach out to our communities to find out how we can help. Fortunately, we have my counterpart, our market president of the commercial team, who's going to share some of those insights. But we've been through the initial round, and now we've got a second round going through. And I know I speak for us for sure, not for necessarily the other banks. We have definitely fine-tuned the process from what was the beginning, and we hope more and more people are taking advantage of this. It's going to be critical that you do listen, because I think the biggest challenge for a lot of companies is, what do I need to provide in order to justify the PPP funds required for my business, and how much I qualify for. And I know our teams work diligently with the applicants. So we're looking forward to this webinar. A lot of great representation here. So very excited again on behalf of TD Bank, America's Most Convenient Bank, to be supporting the webinar. You want me to turn it over to our next sponsor, Alfred? Go ahead and do that if you like.
No, well, let me introduce our friends.
Go ahead, because that's another one of my dear friends. That's why,
absolutely. He's a dear friend of many of us and many of our small businesses, because Career Source South Florida has been extremely active. Oh, it looks like I have some video problems. There you go. Career Source South Florida has been extremely active in helping out many businesses. So I want to bring to the stage my friend Rick Beasley, who is the executive director of Career Source South Florida. Rick, thanks for your support, not only of this program, but of the many programs that you are really putting out there that have helped on a lot of companies. We'll talk a little bit about that later, but thanks for being a part of this. Why don't you say a few words?
Well, one, Alfred, to you and the wonderful staff over the Greater Miami Chamber of Commerce. We thank you for what you all have done, how you've repivoted, how you provided services to our business community. It is much needed. So again, thank you, Tanya, and the rest of the crew over there. You guys have been doing a fantastic job. And to my my good friend Felipe, it's always great to have Felipe, and again, our former chair of this great organization, TD Bank, the most convenient bank, and you owe me that for that one there, Felipe. But on behalf of Career Source, our goal is to work with our chambers of commerce, with all our good partners, to help rebuild, recover our great community, and programs of working with the Greater Miami Chamber of our rapid response, our enhancements, and not only with the chamber, with the Miami-Dade Chamber, with Chemical, with the Beacon Council. You guys have been fantastic and been able to help. And I know we have some other good friends, Mark Trowbridge with the Coral Gables Chamber. Without our chambers of commerce, we cannot help rebuild and restructure our community. And I think this pandemic has allowed us to enhance our partnerships and the wonderful work you're doing. So for the companies that are hearing my voice, please reach out to the Greater Miami Chamber of Commerce and our other partners that are here to see what other services we can afford you all, what we can provide to help your companies enhance their opportunity to expand for this community. Again, on behalf of Career Source, our role is to help build talent, but in a partnership with Greater Miami Chamber, we launched the Layoff Aversion Fund. And so for those companies, and again, you can apply for PPP loans, but you can also continue to apply for our Layoff Aversion grant, which is through the Greater Miami Chamber of Commerce, the Beacon Council, Chemical, and Tools for Change. The resources are there. This is a grant. But again, the resources that our wonderful partners have done and put out, again, Alfred and his great staff, Tanya, and those guys have been fantastic of helping provide resources for our community, and that's what's needed. So this community cannot grow without a strong and vibrant business community. And so I want to thank again the Greater Miami Chamber of Commerce and the work that you all have done. So continue your efforts. Career Source is there to assist, and we want to thank you for all that you do.
Thanks, Rick. And you both said an incredible amount of important information. One is really take advantage of the things you're going to be hearing about today, because let me just say this, the oh, I guess we're having video start. There we go. Hopefully that does it. Okay. So, I mean, really, there's been a lot of funding. The last round, we left billions, hundreds of billions of dollars on the table. We don't want to do that again. Listen, Florida is ahead of most of the country in terms of making use of those funds, but there's still, I know that there's still, we're all hearing it. Mike, myself, Mark, all of the chambers are hearing how much need there is for our small businesses. We've done well, we can do better. So please use this. Thank you, Rick, for putting together the Layoff Aversion Fund, the Beacon Council, us at the Chamber, Kamacol, Prospera, many other partners have been working to get millions of dollars out in reimbursement grants. So thank you for that. And we'll talk a little bit more. I'm going to invite our partners to, I know that a lot of us are have those programs, and please put links to that in the chat. Next, it's my pleasure, speaking of partners, to introduce the president and CEO of the Miami-Dade Beacon Council, Mike Finney, who's had great success in also helping out our small businesses. So, Mike, why don't you say a few words? Thank you for being here with us.
Yeah, good afternoon, everyone. Alfred, thank you so much for the kind introduction, and to the other chambers that are represented as a part of this event. We really appreciate the ongoing partnership. The Beacon Council serves as the Miami-Dade County's economic development partner, and as part of that job, we have really been working hand in glove with all the organizations that are represented here to ensure that our businesses come out of this crisis as strong as they were before the crisis started. It's interesting that we're coming up on a year, and I remember the very first round of PPP when it came out and was introduced, and we partnered with the Chamber to communicate the ins and outs of it to the community. It ended up being extremely positive. One of the most significant things that we've noticed since this crisis started was that our small businesses need a lot of additional help. In particular, there's all kinds of just technical assistance that's needed, whether it's applying for a loan, finding new customers, putting together marketing plans, creating a digital footprint, and the list goes on in terms of just core services that our small businesses need. And so we, in partnership again with about 20 other organizations, have actively stood up what we're calling a small business accelerator. That accelerator is intended to help small businesses on an ongoing basis, not just in response to this crisis, which serves as a catalyst, but it's intended to be an ongoing resource that will help small businesses stay on top of issues like PPP and others that may be out there to help move businesses forward faster. So look forward to more information coming out about the Small Business Accelerator from the Beacon Council. Again, the organizations that are represented here will likely be partnering with us and many others. And we think this is a way of helping our small businesses on an ongoing basis so that we don't allow ourselves to experience what we have over this past year ever again. Clearly, we can't predict when the next pandemic or crisis is going to happen, but we can prepare ourselves and frankly prepare our small businesses for the challenges that they're likely to face. And that's what this is all about. And this opportunity to participate in rolling out this next round of PPP, we truly appreciate the partnership on behalf of all the chambers who are represented today. So I trust everyone will benefit from the information that's being shared and look forward to hearing the details of the discussion today. Thanks a lot.
Thanks, Mike. And thanks for all the great work you do. Hey, as I mentioned, our good friend Eric Knowles wasn't able to be with us, but we really thank his efforts at the Miami-Dade Chamber of Commerce. Let me bring up my very good friend and partner in crime, Mark Trowbridge, who's president and CEO of the Coral Gables Chamber of Commerce. And as I said, he's the chair of the Coalition of Miami-Dade Chamber of Commerce's, who's really just done a fabulous work working together to get out this kind of information to all of our members out there. Mark, go ahead.
Thanks, Alfred, and I'll certainly echo your comments of welcome, especially to all of our members across the coalition, from Homestead to Aventura, from Miami Beach to Hialeah. Welcome to today's program, Ask the Expert, as we talk once again about PPP loans. Our coalition has been meeting, as you heard from Alfred, for the last year, almost every other week, and we represent 16 local chambers in our community. As you heard Alfred also mention, 87 companies came to us at our January session and we're helped by listening to the experts, many of whom you'll hear from again today. I want to especially thank Felipe and Pablo and all of our community banks for the heroic work that they have done as each round of PPP has rolled out beginning on April 3rd, 2020. The power of partnerships is alive and well, not only in programs like this, but in opportunities to collaborate. I think you heard well from my colleagues like Mike Finney and of course, Rick Beasley and Alfred himself about how we have been working together to really not only help our community, but to help save jobs, keep people in the work environment, and to help your businesses once again thrive. I'm going to get the opportunity to introduce our panelists. Of course, Alfred will serve as our able moderator. First, we have Deborah Salas. She is the lead lender relations specialist and brand manager, YEFL, South Florida District Office of the U.S. Small Business Administration, or as we just like to call them, our good friends at the SBA. She's going to talk about the PPP overview, regulations, and processes, and she'll be first up. She then will be followed by Pablo Pino. He's the South Florida Market President at TD Bank. You heard from his good colleague Felipe earlier, but he'll be speaking to us about the PPP process from a banking perspective. And as I mentioned, folks like TD Bank, they've been great partners and true heroes in this process. And then we'll be joined by Margaret Reach, Senior Manager at BDO USA. She'll be talking about advice you can give to clients, common mistakes that might be made, and answer those questions you may have. So please use the Q&A function as well as the chat, but really for your questions, go ahead and begin putting those in now. And once the presentations are complete, we'll have the opportunity to get to them. So ladies and gentlemen, that's our panel. I'll turn it back to Alfred, and I know he'll tee up Deborah to begin on behalf of the Small Business Administration. Thanks, everybody.
Thanks. Thanks, Mark. And yeah, Deborah, I want to go ahead and go right to you. Really thank you for all that you have been doing. The information you've been sharing, SBA has been really wonderful. I know there's been trying times for you guys as well, but you really have stood up, and I want to really give great kudos to you and your team. Thank you for being here today.
Thank you so much for having us. We are equally as passionate about helping small businesses to not only grow their business, but during times of recovery, which is what we're all dealing with now, right? So we're going to start my presentation. Hopefully I will answer a lot of everyone's questions with this presentation today. Go ahead and change the slide, please. So we're going to talk about today's coronavirus relief options, as well as our main focus on PPP, everybody's favorite. Next slide. So I just wanted to share with everybody a tool that a lot of people don't know. It's called Lender Match. And for those of you that haven't applied yet to PPP, it is available for you, but it's not just for PPP. It also opens up to all of our flagship programs, our 7A, our 504, our micro. So you can find a lender there that might have an appetite for what you're looking for as far as access to capital. I'm sure some of you realize that PPP fiscal year 2021 is a little different than fiscal year 2020. We made sure that we got the funds into the hands of those that needed it the most first, with launching with our community financial institutions and then opening it up to all different kinds of lenders. Next slide, please. So let's talk about the first draw PPP loan. For eligible applicants that did not receive a PPP loan prior to August 9th, 2020, when we ended the first round, we now opened it up to different types of entities. We have, and we'll talk about that in a little bit, and we have expanded our covered eligible expenses. Borrowers can now choose not just 8 weeks or 24 weeks, any period in between that. Certain borrowers may request an increase to their original PPP loan amount, and that is something I encourage you to work directly with your lender on. Remember, 100% of PPP is facilitated directly through your lender. So there is certain restrictions to that increase. It's not, I just made an error on my application round one. Let me just, apply for a new higher amount. So there are some hoops to jump for that one. But I do want everyone to remember a very important date. As of today, everything I'm sharing with you, of course, is current as of today's date, but The legislation mandates that as of March 31st, 2021, or until congressional appropriations expire. However, we still have billions of dollars in funding left. That would be the date, the last day to get approval for PPP. Next slide, please. So let's talk briefly about loan eligibility. So we added some newly eligible housing cooperative, destination marketing organizations, such as like the travel bureau centers, certain 501c6 organization, our chambers of commerce, and eligible news organizations we expanded to. We still have all of our, eligible small business entities. Basically, your LLCs, partnerships, corporations, sole props, your 1099s, your self-employed, and our 501c3 nonprofit organizations. We did open it up to specific nonprofits, and our veterans organizations and our tribal businesses. Next slide, please. So what is second draw? We need to distinguish between the two. So second draw, you have 300 employees or less, and you have to have suffered a 25% reduction in gross receipts. So that's a little different than first draw, which is 500 employees or less, right? And you don't have to demonstrate that 25% reduction in gross receipts. Here, you will have to provide the documentation and the financial proof that you, in fact, suffered that. So for most borrowers, the maximum loan amount of a second draw is taking 2.5 times your average monthly, either 2019 or 2020 payroll costs, and the maximum loan amount is $2 million. For borrowers in the food accommodation services sector, the NAICS code 72, the maximum loan amount for PPP is a little more expensive. It's 3.5 times the average monthly 2019 or 2020 payroll costs, once again, capped at $2 million. We know those were hardest hitting, so we want to make sure they get a little extra buffering. And then the second draw PPP loan applicants, we do have a specific application different than the first draw. It has an SD on the end, obviously for second draw, but I do want to encourage everyone, check with your lender first. A lot of the lenders have an online portal, and they would actually have their own lender equivalent application that you'll want to check out. Make sure that you're not duplicating efforts if it's all online through your lender. Next slide. So second draw, one of the main points here is that you had to have previously used a first draw, all the funds for the appropriate eligible criteria. So, logic would dictate if you haven't used all your funds for your first draw, why are you asking for more money on your second draw? So that to me is a logical requirement. Additional eligibility requirement besides using all the first draw loan amount would be, like we talked about, to reiterate, you can't have any more than 300 employees. You have to demonstrate that 25% reduction in gross receipts between the comparable quarters. So if you pick quarter 3 in 2019, it needs to be quarter 3 in 2020. Next slide, please. So we launched it obviously in January of this year. Next slide. You can keep going. Eligible businesses must have experienced at least one quarter in 2020 where revenues that demonstrated that 25% drop below in a corresponding 2019 quarter. We've talked about that you have to have, no, we didn't talk about a very important aspect here. And a lot of people call our district. Julio, my counterpart, is helping with the chat. So I do want to remind everybody to ask your questions, go to the chat, and thank you, Julio Villiers, for being here with me. And he does know that we get these calls all the time. If you are not in operation, if you weren't in operation prior to February 15, 2020, you are not eligible for PPP. So remember, this is not the right fit for a startup, okay? We have other loan programs for startups, so just keep that in mind because we do get that call a lot. The loan limit is $2 million, and we already discussed as far as the how to calculate your monthly payroll. Next slide, please. So let's talk about the changes to PPP. There are additional eligible expenses that we added: operational expenses, software, cloud computing, HR, accounting. We have property damages, repairs expenses due to public disturbance. The caveat there is it can't be covered under your insurance. We have supplier costs essential to your business, worker protection expenditure, the PPE. We also have the employer provided group insurance can also be included now. Let's talk about loan forgiveness. So borrowers must apply for forgiveness through their lender. Remember, a lot of people, they send Julio and I applications. They send it to our SBA district office. Do not mail us your PPP forgiveness application. Unfortunately, you would just lengthen the whole process. You want to work directly with your lender on that. So updates to Economic Aid Act. The idle advances are no longer deducted from forgiveness payments. So we uncoupled those. When I say we, Congress did. Forgiven PPP loans are not taxable income. Expenses paid with PPP loan funds are now tax deductible. You want to consult your IRS or your CPA. And I know Margaret is going to talk later and elaborate about that in today's presentation. We have expanded forgivable expenses are permissible for any PPP loan not already forgiven. And we created a simplified, streamlined, as everybody's been waiting for, the $150,000 and under loan amount. Let's move to the next slide. So what I like about this slide is it shows sort of the evolution of PPP. It shows where we started and where we are today. So today we're at the last one, Economic Aid Act, the 1% interest rate still holds. We expanded the term from 2 years to 5 years, but you still would be held accountable for the 2 years if you have a balance and not all is forgiven if you close prior to June 5th, 2020. The deferment period was extended to 10 months. Now you have any period of time between 8 and 24 weeks. You want a 13-week covered period, you can. What we haven't changed, well, we have changed the 60% minimum payroll requirement. So before it was 75%. We haven't changed it since the Flexibility Act. But remember, that's a choice you're making. You can certainly do straight payroll 100% if that is the bulk of your needs. And non-payroll expenses remains at 40%. Next slide, please. So I'd like to briefly talk about, we're doing so much and there's a lot to talk about. And I certainly can't cover everything in today's presentation, but I do want to share with you, and hopefully Julio can put this in the chat. We have a great website, sba.gov/coronavirus relief. And on it, you'll find all this information. So as part of our debt relief efforts, the SBA potentially can pay 3 months of principal and interest for any new SBA guaranteed loans funded from February 1st to September 30th, 2021. We can pay potentially additional 6 months of principal and interest on existing 7A, 504, and microloans if funded dispersed on or before September 27, 2020. If it were dispersed after September 27th on the 28th, then it would be a 3-month principal and interest. We even have a 2 months payment if you close prior to March 27, 2020 for existing SBA loan clientele. And then we give another 3 months for underserved businesses. And there's certain, I started that is capped at 9,000. And there are some specific requirements for some of this, but I do want to share with you, basically, we have a myriad of options for those businesses that really are in dire need of access to capital and some payment relief. So veteran-owned businesses can receive a waiver of guarantee fees. We have, obviously, everything is subject to availability. We have our Community Advantage program as well. We also reduce the SBA guarantee fee to 0. So we have a lot of options, basically, to keep your businesses open, because that's at the bottom line what we're trying to do. Retain jobs, keep businesses open. Next slide, please. So let's talk about our disaster loan. I'm not talking about our idle loan right now that everybody knows, as it pertains to coronavirus. I'm talking about people that might have gotten a hurricane disaster loan prior. So if you Not a disaster loan. We also have relief on payments as well for you. If you were in regular servicing status, March 1st, 2020, you got 12 months, an entire year of deferred payments. Now that will end shortly within the same date that PPP ends, unless legislatively they extend that, but that would be March 31st. We have our express loan through the Economic Aid Act. We also did the, we increased it. It was at 350. We increased the loan amount to 1 million until October 1st, 2021. After this date, the maximum loan amount will actually be increased again to 500,000. So it'll be decreased from the temporary 1 million, but we've always had it at 350. So increasing it to 500,000 is a win-win, I believe, as well. And the Express Loan Program, you can reach out to your lender that you have a relationship with and see if they actually are an approved lender to do express lending. If not, once again, you can find on Lender Match who would be a good fit for you on that as well. Next slide, please. So we also have our Express Bridge loan. This is a small micro loan. It does allow businesses that if you have a relationship with your lender, it's a quick, streamlined, fast $25,000. And it can be refinanced out through the EIDL proceeds as well. Next slide. So EIDL, this is our Economic Injury Disaster Loan to meet the financial obligations and run the operating expenses that you could not have met had the disaster not occurred. EIDL loan, we get this call all the time at district if people got denied from this program. Remember, this program is not for, let's take an unhealthy pre-COVID business in 2019 that showed losses and make them healthy by giving them a loan. That's not the purpose of EIDL. EIDL is that prior to COVID, you were doing fine, you were paying all your bills, but because of COVID, because of health directives, you were seriously affected and your cash flow was affected. So this is a wonderful program because if you're eligible, first of all, the terms are amazing, 30 years, long-term, fixed rate at 2.75 for nonprofits, 3.75% for businesses. You have working capital, normal operating expenses, example, continuation of healthcare benefits, utilities, fixed debt, monthly payments. Collateral, how we will do that is anything over 25,000, we'll do a blanket UCC lien. And what that means is basically in layman's terms, putting like a mortgage on your business on all your assets. Next slide, please. So EIDL Advance, this is an emergency EIDL grant program. It's a little different than when we launched it in fiscal year 2020. Right now, we're doing a targeted approach and it is a true grant. So this one, we are sending letters out to everybody that live in an LMI area, low to moderate income. We're doing a target approach, once again, making sure those that need the money the most are getting it the quickest. You cannot have more than 300 employees, but the caveat here is you must have suffered economic loss of greater than 30%. So, and there's certain specific periods of time. So you're going to choose an 8-week period between March 2nd, 2020 and December 31st, 2021, relative to a comparable 8-week period preceding March 2nd, 2020. And the total amounts available to eligible entities is $10,000. So up to $10,000. We can also, if you're eligible, make you whole. If the first time you only got 2,000 and this time you're eligible, you meet all these criteria, you can actually get the difference, is my understanding and how it was relayed to me. We're no longer subtracting it from PPP forgiveness. It is a grant for those businesses that really, really suffered the most, the small little mom and pop stores. Next slide, please. Briefly, I'll talk to you about the Shutter Venue Operators Grant. This program, we've set aside $15 billion with a $2 billion set aside for those with less than 50 employees. And we're going to target live venues with operators of theatrical producers, talent reps, live performing arts, museums, independent motion pictures, zoos, The caveat here is you must demonstrate 25% reduction in revenue. That's the minimum. We'll talk about how that's going to roll out in a second, and can be up to $10 million. So with a supplement of 50% potentially later on. So let me tell you how we're doing that. Similar to the EIDL, advanced grant, we're targeting first 2 weeks, 90% or greater revenue loss. And then 14 days after that, 70% greater loss. And then it's going to go, subsequently down to the minimum. Now, I will tell you this, that this applications are going to be run through the Office of Disaster Assistance. We have not started taking applications. We have been getting a flood of inquiries around this program. It's an amazing program. The one thing I want to remind everybody, if you decide to take this route, and you should obviously speak with a business expert, your accountant, your CPA, somebody, one of our resource partners, because it's one or the other, second draw or shuttered venue operators grant. Okay, we're coming to the end. Like I said, I have to say this disclaimer because everything's moving so fast. We're building an airplane mid-flight, as they say. This guidance is current as of yesterday's date when I reviewed this PowerPoint. And thank you all so much for letting me share this information to the small business community. We will go ahead and take questions in the end. I know that you can ask them in the chat, and we're going to move on to the next presenter.
Thanks, Deborah. That was a lot of information. Really want to thank you at the SBA for being a part of this, for getting the information out, for putting these programs together that are helping our very struggling business. This last presentation about the shuttered business ones was extremely helpful. Next, I know, our banks have been key to getting this money out. Without them, it wouldn't be out there at all. TD Bank, America's most convenient bank. I get a royalty every time I say that, right? Right, Pablo? Anyway, they have been at the forefront nationally of getting this money out. We're one of the top banks getting funds out, so we're really privileged to have Sergio Pino come. Thanks, Sergio.
Thank
Pablo,
you,
Pablo Pino. I'm so sorry.
Alfred. No problem at all. I do know Sergio Pino, but thank you everyone for being here. Deborah Salas and her team has been amazing, at least with with all the banks, right, and putting out these great programs. I'll give you a quick update as to what we're seeing. We're processing roughly about 1,300 applications per day. We've seen, as Deborah mentioned, it was $285 billion, and I think in the first few weeks we saw nationwide, I guess there was about $35 billion each week being processed. So I think we're there should be a lot of money there available for a little bit. One of the things that we're seeing with our customers, there's a Reg B process obviously in place when you apply for a PPP loan or any type of loan, and we have about 30 days to make a decision. So, my recommendation is to anyone who does apply, and TD Bank is available to apply. I think we put actually our link on the website here. That you do apply, and then stay in touch with your banker and make sure that you respond to any questions that may come up, because again, we have a short window to make that decision and get you funded as quickly as possible. And also there's some enhanced due diligence also that the SBA and the banks are doing. So sometimes, let's say you have a common name and they're doing background checks, and something may come up on your company, and your bank will reach out to you to kind of check things out and clear it and get back to the SBA with clarification. So you may be approved by the bank, but then the bank basically moves that application to the SBA for funding, and then there may be some questions here or there. So the main thing is to, if you're interested in applying, go ahead and then stay in touch with the bank to make sure it's being processed on a timely basis and get you the funding as quickly as possible. And a lot of great programs that Deborah mentioned. We're also seeing a lot of activity on the 7A program. The SBA at this point in time is waiving some fees and taking care of the first, I believe, 90-day payments or first 3 months. So a lot of great programs out there to keep our economy going. And please take advantage of it. Consult your CPAs, work with your banks. and we'll take it from there. So any questions you may have, put it in the chat, and I'll be more than happy to answer them to the best. If not, I could get a circle back with additional information.
Thanks. Thanks, Pablo. And I swear I can tell the difference between you and Sergio. Yeah, the banks have been extremely important in getting the money out. But then, of course, the forgiveness part of this makes it extremely important that you get tax advice from your accountant or a qualified accountant. We are very lucky to have with us today from BDO, our very good friend from BDO that has basically been able to, Maggie has been able to put together a great presentation. She really has become, I think, one of the experts in the field, and so we're really very lucky to have her with us today. Maggie, why don't you tell us a little bit about what the companies need to know in applying and in getting forgiveness?
Sorry, I was muted. Absolutely, and thank you very much for the kind introduction. Yeah, as you mentioned, I just want to give a little brief update. MBAF was acquired by BDO, and I was previously on a webinar with the chamber representing MBAF, and now we are BDO, largest CPA firm in the state of Florida as a result of the merger and acquisition, and now the largest in Miami. So we're so happy to join together with BDO to better serve Miami and the state of Florida and nationally. So on the agenda today, we received a lot of questions about, general updates about the new provisions that were provided that were signed into law right before the year end, as well as the treatment on the tax return. So yes, these PPP loan expenses are deductible. And then this interplay, really interesting interplay between PPP loan forgiveness and the employee retention credit. And then I'm going to speak a little bit about some of the documentation, because actually the biggest time cruncher, the biggest time constraint in the applications is actually the documentation to submit. That's what I've been finding, at least in practice. So let me just give some updates. On January 19th, the SBA released new forgiveness applications, new versions of the applications that were already in existence. So the new 3508S, the new 3508EZ, and the new 3508 long form. Some banks I found have not updated their portals yet for these new forms. They're slowly getting there. So be sure to ask your bank if they have the newest application on their portal. As you'll see in the next few slides, that there are expanded definitions of payroll costs and non-payroll costs that could be used for the forgiveness application. So just some updates for the 3508S. So the difference between the new and the old is the old 3508S was used for loans less than 50,000. And now the new 3508S is for loans that are less than 150,000. Also requires, what's great about the 3508S, I'm a huge fan, is it requires far fewer calculations and less documentation. But there is one thing that not a lot of people realize about the 3508S, and that's that you just can't say, okay, my loan amount is less than 150,000. I'm going to submit it for forgiveness and be done with it. If your loan was greater than 50,000 but less than 150,000, and you may have had reductions in headcount or salary and wages, you actually have to use the formulaic approach provided in the Form 3508 to calculate the reductions to the forgiveness amount. So if your loan amount was, let's say, 125,000 and you had some headcount reductions, you need to apply for forgiveness of the 125,000 less any reductions as calculated by the 3508. What's great about that with the 3508S is even though you do have to calculate these reductions, you don't have to submit it as documentation with the application, but you just have to have it ready for when the SBA might come and ask, okay, how did you calculate your forgiveness amount? So here's just the updated look of the new 3508S. You can see at the top, it says use it for loans less than 150,000. And essentially you put on here the amount you're requesting of loan forgiveness. So like I said, if it was 125,000 less those reductions I talked about, you would be requesting on here, an amount less. And what is pretty simple about it is that it just has these certifications on here that you have to make. I mean, these are very, very important certifications. Please read them and be sure that you have read the rules and have applied them when submitting this application, because there are severe penalties for misrepresenting yourself and misrepresenting the bank. So the other new application is the 3508EZ. So one big change between the 3508EZ in the old version versus the new version as of January 19th is that there's 2 criteria now instead of 3. One of the criteria for the EZ was that you were a sole proprietor. That now falls into the 3508S. They kind of shrunk the 2 criteria to these 2, and that was you can use the 3508S if you had a loan amount greater than 150,000, and you either did not reduce your salary or wages by more than 25% during the covered period as compared to the most recent full quarter, and you did not reduce the head count or average paid hours of employees between January 1st and the end of the covered period. One thing to note with this is that people are a little bit confused on what this means. How I've interpreted and how our firm has interpreted is the number of employees that you had on January 1st, compare that to the number of employees you had at the end of the covered period. So these should be one number compared to the other number. If January 1st number is less than the end of the covered period, then you have no problem. If the end of the covered period is less than January 1st, then you can't use the EZ. And the other criteria B, basically mirrors criteria A, except for if you had a headcount reduction because your business was unable to operate at the same level as business activity as of February 15, 2020, because of compliance with COVID-19 safety guidelines. So where we really see this is for those restaurants, those places that are open to the public who really had business activity impacted. We don't see this for employers who moved for work from home. So you really got to be careful and really understand whether or not you can qualify for the second criteria. And one other thing with the first criteria is that you need to submit documentation of how you calculated the employees as of January 1st and how you calculate the employees as of the end of the covered period, that last day of the covered period. And I'll go into that in a minute. And here's just a new look of the new 3508EZ. And you can see, as Deborah mentioned, that there are expanded payroll costs and non-payroll costs. The non-payroll costs that were expanded are the covered operation expenditures. Those are cloud computing expenses, payroll provider expenses, some HR support, covered property damage costs. That includes costs from a damage to the property, mostly because of the riots and other protests, those types of damage costs, covered supplier costs. So if you had paid for an order before the covered period began and they still shipped it to you, but you couldn't do anything with those supplies, you can include that. And covered worker protection expenditures, so that's face coverings, other sanitation items that you've purchased for the business to keep everyone safe. So like I mentioned before, and I won't go into this, but some of these new expenses in payroll are group life, disability, vision, or dental insurance that the employer covers. That is different from before. And this change is actually retroactive to the CARES Act. So if think about this, if you're applying for your second draw PPP loan and you're using 2019 payroll to calculate the second draw loan amount, you can actually add in group life, disability, vision from 2019 as well. So that's a new expanded definition of payroll costs. And then also, as I mentioned before, these non-payroll expenses, but still not more than 40% of the forgiven amount can be used for non-payroll. That did not change. Another interesting change to the applications is the change to the end of the covered period. So before it was 8 weeks or 24 weeks, and something in between if you submitted the loan application before the 24 weeks ended. Now it's 8 weeks or 24 weeks or whatever you want in between, which is really, really great. And it removed the need for the alternative payroll covered period. And it does affect the safe harbor, but we can go into that later at another time. Another great item as a result of the new legislation was that EIDL grants do not reduce the forgiveness amount. So if you submitted your application before the enactment of the new law and you reduced your forgiveness amount by an EIDL loan, the SBA will actually remit to the bank those funds. So you won't be penalized for reducing your loan amount by the EIDL advance amount. So those have no reduction to the forgiveness amount. And now what's really amazing is that borrowers can claim the employee retention credit and receive a PPP loan. So I'm going to go into that in a little later on here. But it's a really great opportunity, and as Alfred mentioned, it hasn't really been tapped into a lot, but we should really promote it because it's an amazing opportunity for businesses. Also, with the legislation that we were, biting our nails about all during the fall was whether or not PPP loan eligible expenses would be deductible, and now we know that they are. So you can take a deduction for those expenses that you used that satisfied the PPP loan forgiveness amount. And also too, that the forgivable loan proceeds are not taxable. So there is no taxable effect on the PPP loan forgiveness. The one thing that is causing issues is for S Corps and partnerships with basis issues. Essentially, there's a decrease in your basis in the year that you incurred those expenses, and then in the following year, it's increased by the tax exempt income. You have a bit of a mismatch with the timing of when you can actually deduct those expenses on your tax return. And that's something we really work on heavily at BDO. And if you have any questions, feel free to reach out to me and we can look into your specific matter. So let's talk about the employee retention credit. So before, this credit was not available if you received a PPP loan, and now it is. So it is retroactive. So if you didn't claim it in 2020, you can actually go back and amend your quarterly 941s to claim the credit. But you're only eligible if you satisfied one of these two requirements. One, that your operations were shut down partially or fully due to a government order. So that's really talking about the hotels and the restaurants that were open to the public, et cetera, that had to be shut down. Or your gross receipts for a 2020 calendar quarter declined by at least 50% when compared to the same calendar quarter in 2019. So to really do this, figure out whether or not you're eligible, I recommend pulling your financials for your gross receipts and comparing each calendar quarter in 2020 compared to each calendar quarter in 2019 to see if there's a decline of at least 50%. If there is, then you're qualified for that quarter. So what are qualified wages? Well, they're the same wages really as the PPP loan wages. They're gross wages, Medicare wages, and employer portion of group healthcare expenses. So those are the same wages, and that leads to the interplay issue that I'm going to talk about in a little bit about double counting the two wages. You can't do that. They have to be separate. So the credit for 2020 is 50% of qualified wages up to $10,000 per employee for the whole year. So essentially, once you've paid one employee at least $10,000, you need to stop it, and that's you're only eligible to use 10,000 per employee for the whole year. And the credit is 50% of that. So the maximum credit that you can get per employee is $5,000. And this last bullet was actually more relevant January 31st. The new 941 for Q4 2020 included a line to claim the ERC credit for all of 2020. So now, instead of amending the fourth quarter 2020 941, if you would like to claim the credit, let's say in the second quarter and the third, where you had this decline in gross receipts, you would just go on ahead and amend Q3 or Q2 of 2020's Form 941. So the credit for 2021 is excellent. It's totally different than the credit for 2020. All you have to do is show a decline of 20% in the first quarter and second quarter of 2021 compared to the relevant quarter of 2019. So here in the slides for Q1, you can actually use, they actually give this alternative quarter test. You can test Q1 2021 to Q4 2020, and vice versa. So it's a really great credit because it only requires a 20% decline in gross receipts as compared to a 50% decline in gross receipts that was for the 2020 credit. Also, this 10,000 limit per employee is actually per quarter. It's not for the whole year. And they increased the credit rate to 70%. So if you qualify for the ERC for 2021, Q1 and Q2, because that's all it's available in just Q1 and Q2, and you paid each employee $10,000 in those quarters, your maximum credit dollar for dollar is $14,000. So it's a really fabulous credit that not a lot of people recognize. So, we highly recommend looking into this. We have and I'll talk about it later, but we have a whole group committed to this and calculating this for our clients. The only problem is that the wages cannot be used for PPP. So you can get a PPP loan and you could take advantage of the ERC, but you can't double count the wages. So let's kind of go into how that would look. I'll fast forward a little bit. So these are just kind of a quick high level example that if you had 50 employees and you were qualified for the ERC March 13th to June 30th, and your monthly payroll was $250 and your total wages for those months was $875 and your PPP loan amount was $650. You can see in here that the play on this is to actually have a longer covered period so that you can allocate, you can cut off the PPP. You can kind of distinguish the ERC and the PPP. So the ERC credit will cut off 3.5 months in basically to the covered period. And then the rest will be available for PPP. So kind of doing these timing calculations will really take advantage. You can really take advantage of the employee retention credit. Another thing to think about here is really maximizing the non-payroll costs. So the non-payroll costs you have no issues with the ERC. So rather than submitting all your payroll costs for the covered period, only submit enough to get you to the 60% threshold and then maximize that other 40% so that you can take advantage of the ERC. That's another tip and trick that we talk to our clients about. So how do we claim the credit now? Now that we've passed the fourth quarter, like I said, you can amend those quarterly returns of 2020, but for Q1 2021 and Q2 of 2021, what you can do is you can reduce your federal employment tax deposit. So if you're going to get the credit, just reduce the deposits for those employment tax. You can also do a rapid refund. So let's say you didn't you paid in all the employment taxes, you can do a rapid refund of Form 7200 to get an advance payment from the IRS, or you can just do it on your Form 941, or you can amend it. So here are some really great articles, and we'll forward these slides along about what BDO thought leadership has on the matter, how we're facing all of this and we're tackling it. But also know that these are some tips and tricks into how we recommend, we advise maximizing the ERC and maximizing forgiveness. But there actually has not been guidance released by the IRS about the interplay. So we're still waiting every day, looking into the IRS websites, but the IRS and the SBA need to discuss and they need to coordinate on how these two are really going to affect each other. If I submit, $1 million of payroll on my application, but my loan was only 600,000, do I lose that extra 400,000 to be able to use to ERC? So there, we have a lot of questions that still need to be answered on this. Here's some summary dates to watch, and I believe Deborah talked about these, but the new application deadline for second draw PPP loans is March 31st, or the exhaustion of the funds, but we think that there's still going to be plenty of funds up to that point. And the ERC is available for wages paid prior to June 30th. The FFCRA payroll tax credit, which is another tax credit, was extended to March 31st. So keep that in mind. And let's just go into some of the documentation requirements that we have some time. I'm going to close this screen because I think this is really important and draws a lot of confusion. So here's the 3508S. As you can see, much simpler. Don't really need to report any calculations. And also documentation is not required essentially for this one. If we go to the end, we read that documents each borrower must maintain but not submit. So you do need to maintain your payroll and non-payroll documentation, all those canceled checks and invoices. But you don't have to actually submit them with the form. So it's definitely a much easier, quicker way to apply for forgiveness. But you do need to keep everything handy in case the SBA does reach back out and ask for this documentation. The Form 3508 Easy has, let's see, I have two of the 08. Hold on. Let me type it in here. Here's the January 19th. So the Easy's documentation, you must submit, going to the end. You must submit payroll information. So those bank account statements, the third-party payroll provider reports. This is the one thing I mentioned that you need to submit. So if you're selecting criteria A, which was that you did not reduce headcount between January 1st and the end of covered period, you need to provide documentation of how you calculated that employee headcount. So that's really important. And then all your non-payroll costs you must submit. And this aligns with the 3508 as well, same documentation pretty much to submit. So here on page 12, it says, must submit with the application. You must submit your Schedule A and you must submit your calculation form, as well as all the payroll cost documentation, FTE documentation, and non-payroll. So yeah, in the 3508 Easy, you didn't have to submit the FTE documentation other than the headcount as of January 1st and end of covered period if you're in that first criteria. So I think we've had a lot of questions come in. I think I'm going to turn it back over to Alfred so we can dive into those.
Thank you. Thanks, Maggie. Boy, that was a lot of information. As I said at the beginning, I hope everybody had their pencils sharpened. I think Maggie, you're going to allow us to post your PowerPoint, right?
Yeah.
And unfortunately, the SBA cannot share their PowerPoint because things just change so often, and we want to be able to get the most up-to-date information out there. However, if you're interested, you can certainly rewatch this video later on. It'll be posted on our website. So let's open up the cameras. We got a lot of questions that we can have our panelists all join us. We have a lot of questions. I think we've already answered behind the scenes over 14, and we've got another probably 10, 15 left, and we've got a lot more time. So as we get into this, if you have more questions, please remember to put them into the chat. Let me start by, and bear with me for my panelists, because some of these questions are a bit hard for me to even fathom. So I know you guys are going to do a great job answering them. So the first one was from Idemar Severio, PPP for nonprofit organizations. If organizations receive funding from grants that cover their salaries via reimbursement schedule, but need funds for rent, utilities, and salaries not covered by those grants, how is it calculated, and how about the forgiveness part? Are there different guidelines? Deborah, you want to take a shot at that?
Well, I always encourage the borrower to check with their bank, but it is my understanding that nonprofits, we do know that they run a little differently, and grant money is used for salary, et cetera. Potentially, it could be eligible. But they need to check with their lender, and we have an amazing document called How to Calculate Maximum Loan Amounts, and that is on sba.gov/PPP. And that is, as I say, the PPP Bible, and it literally will walk them through step by step of everything on how to calculate their PPP loan amount. So I encourage them, maybe Julio could put that in the chat for everybody, that document. Yeah.
That's great. Anybody else? Go ahead, Pat.
Really brief. Completely agree. Definitely check the guidance, check with the CPAs. But what we have seen in the non-for-profits is certain grants may be geared towards certain employees within the organization that work on certain projects. So let's say the president and CEO of the organization salary may be included there or something like that. So you have to look at the grant, the guidelines, and kind of see if there is a way to include perhaps the salaries of the individuals that are not included. Their salaries are not covered by those grants, and potentially include them there.
Great. Maggie, I'll give you a shot. Is there anything you want to add to that?
Yeah, I mean, we if you do receive grant money, you're not supposed. We do not recommend claiming that amount for forgiveness. So only the amounts that were paid outside of the grant money on payroll is what's eligible for forgiveness, and then that's what's eligible for what hits the 60% payroll, not the grant money. That's our approach.
Okay, great. Well, I hope that answered the question. So this is from Maureen Moscato. My business deals in longer term contracts. We had many contracts placed March of 2020 that sustained us through 2020, but the flow of new business to the pain, I guess, we are seeing from COVID in 2020 is only now starting to show in the drop of new businesses. Do you know if the funds may open up eventually to show the impact COVID has had on businesses that are seeing the longer term effects in the revenue drops in 2021 rather than 2020? Deborah, I think maybe you could take the first crack at that one.
I'm trying to follow it. I think they're talking about long-term help, like if they, I encourage everyone to look at everybody thinks PPP is the be all end all. And somebody like that should explore EIDL loan or 7A. There's, you can combine them. And we have a great cross eligibility matrix on our PPP, our SBA.gov/coronavirus relief. And I know I put that in the chat, but I'm sure Julio did as well. And they can see, can I get a PPP with EIDL, with 7A, and potentially you can. I think they're asking for, that's what I think they're asking for as far as my expertise, but maybe someone else on the panel might be able to answer.
Maggie, you wanna?
I think how I see this question and how, you know, we've been getting a lot of these questions. I think this is what the question is asking is, if I'm on cash basis, I'm going to show a decline in gross receipts. It looks like this person's on accrual and they're not showing those decline in gross receipts. So Deborah, can we switch between cash basis or accrual to show our decline? Because it's not fair if someone maybe on their tax return shows accrual, but on cash basis they're declined, and then someone else, happens to show on cash basis on their tax return. So what are your thoughts on how the SBA is handling this?
Okay, I just took it as, what can the SBA do for if they're not eligible for PPP based on, the limited information. I defer to you, the CPA, but let me tell you what is in the interim final rule. It's accrual or cash. So
Right.
It just depends on what they've been doing, and always defer to their tax returns on that. And that's my overarching position.
Yeah, I think the difficulty you're seeing in answering this is that there's so many specifics that are specific to the individual companies, and it really is important for you to seek out help. Either go to your accountant. If you don't have an accountant, you just heard Maggie, BDO has a great team of experts doing that. If you just want to ask and explore some of those questions, the chamber has GMCC Cares, and we'll drop that in. I know that bizhelp.com, I think it is something like that. The Beacon Council has one that's, and I'm apologizing to Mike for getting the link, but I'm sure he'll put it in to the chat. There's a lot of help out there, so you can ask more specific questions, and you have a little more time from the experts. Let me move to something that I think this is a unique question that I got from one of our members, Olga Ramulo. There's a lot of questions about these other expenses now that are allowed beyond the actual payroll. What really qualifies? And one of the creative questions, and I'm almost embarrassed to say this because it kind of affects the chambers, ours as well as others, but what about costs that are related to membership or of organizations that are like us giving out information necessary, or maybe workshops, seminars, in terms of how do you deal with the current COVID crisis? Are those expenses eligible for under the PPP loan?
So I can share with you, we don't specifically mention that. As far as covered operational expenses, business software, cloud computing, and a service that facilitates business operations, product or service delivery, processing payment, tracking of payroll expenses, human resources, sales, billing, or accounting, tracking of supplies, inventory, records, and expenses. We're very specific. And it's actually, it's all in there in the interim final rule. We have covered property damage costs, and all of our regular ones that I say regular because it feels regular now after a year of this, mortgage interest, rent, and utilities, and we even break out utilities: electric, gas, water, telephone, transportation, internet. So it's very specific on those kind of things. Yeah. But I do encourage you, because it will take a while for me to read, several pages right now, but it is all broken down very specifically for the covered eligible expenses. And once again, your lender, and we have a TD on the call here, and they can work with you, and they have delegated authority to making decisions in-house on what they agree is in the basis and the framework of what the SBA is mandating.
Yeah, well, let's see. Go ahead, Pablo. You want to take a crack at this one? And Maggie, it looks like you want to say something too.
Go ahead, Maggie.
Well, I want to agree. And I think how I like to describe it to my clients is that is there the costs essential to running your business, not necessarily ancillary to the business. So, it'd be nice to get to be a part of these councils and these certain memberships and et cetera. But these are those overhead costs that are necessary to run the business, the HR function, the payroll function, stuff like that. So unfortunately, the fees paid to CPAs and stuff like that does not fall in there.
Great. Here's a question from Carlos Alamilla. Can a shutter venue program be used by a chamber of commerce who holds weekly conferences on various topics for the public at large and members, and has been shut down for 10 months and not been able to gain any revenue? Margaret, you want to take a crack at that? Can the shutter venue program be used by a chamber of commerce who holds weekly conferences on various topics for the public at large and its members, and has been shut down for 10 months, and not able to gain any revenue? Well, Carlos, it looks like you have stumped the experts. You get $1,000. No, listen, there are going to be a lot of questions. This might be one that you'll want to talk to your accountant. If you want, we have experts. As I said, the chamber has experts, and if we don't know, we can hunt down the answer. So does the Beacon Council and others. So please make sure that you follow the links that are going to be dropped in the chat. Paulo, let me send something to you, because one of the questions that we get over and over, especially the last couple of rounds where we were helping some of the banks, and some of the applicants was, how do I get in? I don't have I'm a small business, maybe a mom and pop. I don't have an established corporate relationship with a bank, and so I'm having a hard time getting in. What advice can you give those who don't have these? They qualify, they have all the qualifying expenses, but they don't have the banking relationship.
Yeah, great question, Alfred. And initially, in the first round and the second round, when we initially opened the portal to take in applications, we were mainly focusing on existing customers. And the reason being is we have all their data, right? Know your customer information, and it was a lot easier. As a matter of fact, this week, we opened up the portal to non-customers. And, I think I may have shared our information there. So we are open for non-customers, and we run our due diligence and take it from there. And as long as they, obviously they have to establish a depository relationship with us, because once we process and the SBA approves the application, we actually fund the account here at the bank at TD. And then there's also ADP also processes PPP loan, and some traditional banks are in the business as well. But at least I can speak for TD Bank. We are open to consider and process applications for non-customers at this point in time. And you could actually visit any of our stores or reach out to us, Felipe and myself, and we will get you with the bankers and start the process from there. So we look forward to helping the community out as much as we can.
So there were a lot of banks who were just serving their own customers, and I guess a lot of that has to do with how quickly you can get the package out to folks. I mean, I think that was an important thing. This is kind of a related question around the banking issue is, all right, so if I do have a banking relationship with someone, do I have to use that bank, or can I go to other banks for that?
Yeah, you could go to any bank. My understanding is there's certain banks, every bank has their own policies. I learned the other day, one of our competitors, if you don't have a relationship with them, you have to establish an account. It's going to take 7 days after you establish the account to be able to apply. We don't have that policy. If you basically establish an account at the same time we do our due diligence. The other thing also, you could apply, let's say you applied with one bank for the first PPP loan, you could go back to so you could actually switch up banks or financial institutions. You don't have to go back to the same financial institution you used the first time around. So you could switch that up. And when you go for forgiveness, I believe, I'm not 100% on this. When you go for forgiveness, you may have to go back. So let's say you use two banks. For the first forgiveness, you're going to have to go back to that originating bank. And then the second PPP application, you would have to go to whoever granted the second application.
Okay, thank you. Thank
I
you for
can
that.
just chime in on that. So yes, correct, Pablo. So the borrower has the option to go obviously to whatever banking institution they feel. But I always tell people, it's for as far as convenience and ease of transaction. If you had a good experience with your lender that you already have a relationship with, it might behoove you to stay with them because they already have all your documentation. Now, if you did forgiveness with another bank, that bank that originated that PPP loan is the one that would be responsible for communicating all final determination to you. So, and please understand that although second draw is not dependent on a full forgiveness final determination, that if there are some, unresolved issues, meaning I'm sure everyone's familiar with the lovely hold codes that are occurring now, that in order to move forward on your second draw application for approval, you will need to clear up those hold codes on your first draw. So there is some interdependence between the two. The lenders we just got guidance yesterday on this, that the lender, and of course we don't have everything memorized, but the two lenders can talk, the borrower can be the intermediary. I just want people to go into this eyes wide open to understand that you are applying for a federal government loan program. And there are very specific requirements. It's not fast, let me get the money. Unfortunately, we have to preserve the integrity of this program, and we have to put safeguards in because this is a taxpayer funded program, and SBA is accountable. We have a cabinet level seat where we will sit in front of this administration, and we need to demonstrate what are we doing to protect these small businesses and the capital that we're, putting into the hands of these eligible, that they are in fact eligible. So I just want to remind everybody, because we get calls at district office all the time. People are stressed and upset, and the lenders, it's not the lender's fault. You can leave one lender and go to another lender. That whole code is not going to change. I want people to know that. So you're going to still have the same issue to resolve, but of course, customer service is king, right?
Yeah, I think that's some great advice. We have 7 minutes left. I really want to get to as many of these questions as possible. There are more than we can answer. So again, if your question weren't answered, please go to any one of us. The links are going to be on there to ask the questions. We've got staff and experts ready to help you at least run down the answers. One of the ones that I keep hearing a lot, and there were a lot of these repeated, is can you prepay rent for say 6 months if as part of the 40% forgiveness, if 60% of it you qualify for payroll? Is it possible to prepay it? Margaret, you look like you have an answer.
Right. I mean, the answer to that is no. Basically, it must be paid during the covered period or incurred during the covered period and paid on or before the next regular billing cycle. So, if the billing date is after the covered period. So no, you cannot prepay anything because it has to be incurred.
Yeah, and that's I know there are a lot of folks that are in need. You're trying to be creative and stuff like this, but I think it's also hopeful that the current administration is looking to yet again have other relief coming down the pike. So I think the government knows, and I'm sure I'm not sure if you can comment, but that this is not over by a long shot, and I don't think that the government is bailing out at this level. They've been with us and re-up their commitment every single step of the way, and I fully expect that'll happen going forward. Deborah, any thoughts on that last one?
I concur with Margaret because there is a covered period. So, we can't just use up the funds. I know some people are trying to find creative ways to use up the funds, but at the end of the day, you have to use the funds per the guidelines. So I encourage everybody, it doesn't mean they can't prepay the rent. They can do whatever they want. It's just not going to be eligible for the covered period.
Yeah. Let's see. We also have can a nonprofit apply for a 7A loan? I guess that's for you, Deborah.
At this time, historically, we have not done nonprofit lending. We were for-profit small businesses. So I have heard, through the grapevine that there is discussion on augmenting our program to add nonprofit. There are certain, caveats to that. Let's say, I know faith-based lending institution, and some of them have preschools that are revenue generating, et cetera. There's certain ways, but it's right now, it's in the works. That is my understanding. So 7A at this time is for-profit. I'm sure the banks can comment on that as well. They're the kings of our 7A. We can't do it without you all.
That's great. We've talked a lot about the application. Let me just focus some attention on the forgiveness part. You all now have seen, I guess we're coming up to the second round of forgiveness applications. Are you seeing sort of common mistakes? Are there tips that you can give those who are applying for forgiveness to avoid sort of being rejected in their forgiveness? What can you share to help people sort of think through and their application process? Why don't we start with you, Deborah, and then we'll go over to Maggie and Pablo. We'll go to you after that.
I think regarding forgiveness, and obviously I'm at district office, I'm not, working the applications for forgiveness like the banks are, but I do get, if it gets to my desk, that means there was an issue. A lot of clients, I think they just need to understand to be patient. There's a process. It is, the banks have, 60 days, and then we have 90 days to give the determination. And people after 2 weeks, they're, emailing me, CCing the, CEO of the bank and everybody, and they want an answer. And I know this is dead on the business. It's a liability. They want it resolved. I get it. We all want to go back to normalcy, and they want to just fix, be done with the PPP process. But once again, I just can't remind people enough, it is a federal government loan program. So we need time, we review these files and make sure that you are in fact eligible. And I think people would appreciate that, knowing that people that actually are eligible are getting the money, even if it takes an extra 2 months to make that happen. But the good news is, real quick, things are moving faster, but I defer to the banks on the timeline. I've heard 4 days, I've heard 2 weeks, I've heard 2 months. I have never heard the 5 months yet, but I defer to the lenders on that.
All right, Pablo, let me go to you then, because I know Maggie mentioned that.
Yeah, no, and I think the SBA, over time is putting out additional guidelines. And for example, I believe it's under 150,000. There's some reps and warrants, and that you use the funds appropriately for what you meant to do. And that process for forgiveness is a lot faster. Also, the SBA initially, when the forgiveness started, they've actually, continued to improve the guidelines. And, I think Deborah mentioned it before, that if you qualify for, if you're able to cover the forgiveness part with 100% of payroll, you don't have to provide all the other little things, right? So that's, again, always improving the process, so we as banks can move a little faster. I think the truth of the matter at this point in time, the banks are the top priority is to actually put out the funds from this tranche, right, that's out there as quickly as possible. A lot of banks have we basically put a pause on forgiveness. We anticipate opening up our portal for forgiveness probably the first week of March. For up to under 150,000, because we feel we could process those very, very quickly to the SBA, and then we're going to continue on. But by the same token, I think the guidelines continue to be improved, and the banks definitely appreciate that. And it all depends on how complex the forgiveness is, right? There are companies that we could quickly, it all depends if they have a payroll provider that we could quickly reconcile the information, great. And if sometimes we actually literally have to go through bank statements for 12 months and compare it and all that good stuff. So it all really depends on the situation of a particular company.
Right. Well, I'm sorry, Maggie. We're not going to have time to get to your part of it. I know that you probably have some great advice. We're at the end of our time. I want to thank our panelists. As as we experienced last time, we have many more questions than we could possibly have time to answer. I mean, we could stay another hour and keep answering. Please go to GMCC Cares. Please visit the Beacon Council. You have resources out there to help you out there. Want to thank the panel again for being a part of this. We really have gotten a lot of information out there. You saw that there's a great deal of need. It will continue. Please avail yourselves. Don't give up. Get out there and get the resources that are due you. We left almost $200 billion on the table last time. We don't want to do that again. There certainly is much more need than to leave $200 billion on the table. So get out there and get there. And I hope you saw that there are many different programs available. You can use them all in tandem, educate yourself, avail yourself of some of the help that's out there and get that. Let's not forget that we have the Career Source South Florida layoff aversion fund that could give you up to $10,000 in reimbursing some of your costs. Again, visit the sites at the Chamber, at the Beacon Council, Cole, and others that will be able to get you that kind of information. Look, again, it is our absolute pleasure to help you all. We know you're in pain. We all share that, and we hope that the chambers, the Beacon Council, and all of the coalition of chambers that have been out there helping you, we hope you see how much it is that we're fighting and working on your behalf. Please contact us. Listen, we're at the end of this crisis almost. The vaccine is getting out there quickly. Please stay safe. Please get vaccinated when it is your turn. And we look forward to welcoming you at another one of our programs in the future. Thanks again to all our panel. Please visit miamichamber.com later on for the link to the recording. And again, stay safe.